All right, we are live on YouTube. Welcome, everybody. Welcome. Yeah, maybe. I don't know. We'll see. Remember, if you haven't voted yet, get out there and vote, everybody. I voted right there. So, glad everybody. If you are new, like never been here before, let me know in the chat. Love to welcome you. I'm trying to keep my eye on YouTube and on Zoom. So, welcome. All right. This is 30 Minutes Awesome. We're going to cover number one, the critical CPI preview. Got CPI coming up on Thursday. Potentially a big market mover, bigger than this election junk that we've been hearing about for all day. Number two, we got, of course, the election, possible shockwaves, possibly not. I'm not a big person that cares who gets elected. We just deal with what we got. And then, of course, number three, we're going to take your requests as usual. So let's jump into it, shall we? Now, kicking it off, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, and fun, and is not a recommendation to buy or sell any type of financial instrument. So if you desire personal financial advice, consult your financial advisor, go hire one, and ask them what to do. So we're going to jump into it and talk about all the junk going on here today. All right. Jump out of the slideshow, minimize that. Got some alerts. So, first off, natural gas. Was looking like a pop yesterday on the cold weather warning, but pulled back today. Ow. Not so good, but holding the lows. So, we'll see what happens tomorrow on natural gas. Jumping over to the S&P. Look at this little gem of a thing here. Now I'm using the paid account today. So if the charts look a little bit different, that's why we have pulled back. We popped up, broke through this trend line of the highs, pulled back, kind of held it, did a little poke through and rallied for 3 days now. What's this going to do? I'm not so sure. Right now, this is a toss-up because when you look at this one versus the futures, we've got a whole different situation going on. These two have got to resolve at some point. When you connect the highs and the highs and the highs on the futures, we were holding the trend line today. We could not break through. This puts it in a little bit of a quandary between the S&P futures, which trade almost all the time, and the S&P cash index, which only trades during market hours. I'm not so sure. Now, Nasdaq over here, holding, not able to break out at all, and been trading lower, just above the lows. This one's kind of bearish. It's not looking so hot right there. Gonna zoom it up a little bit. You can see it right here. Why do I look at the futures? Well, the futures trade almost 24/7. They're closed on Saturdays, but they trade on Fridays right up till 6 p.m. Reopen on Sundays at 6 p.m. and keep going all week. They close for a little 1 hour break each evening, but they're right back open. And that's why you don't really see very many gaps. There's one right there. Not many gaps anywhere else in here. So kind of one little kind of gap right in there. One little gap right in there. But for the most part, it doesn't leave any gaps. And that makes it way easier to do the chart analysis. When something like the S&P, you got to contend with all these gaps, all this missing price action. Whereas the futures doesn't do that. Now, the third leg of this market is the Russell, the small caps. These have potential to lead us into the next run, and they're set up kind of bullish right now. This thing's holding an uptrend of the lows. It's broken through that trend line. It didn't even come back and retest it. So this is a positive sign for small caps, and the opportunities may be in those small cap names. So that's something to keep an eye on moving forward here. Oil, struggling. It kind of flirted with my $90 price target right at the roadmap line there. Failing to break out higher. Now, what does all this kind of situation mean? Well, this puts us in kind of a situation where right now, well, it could be a little bit of a coin flip between bullish and bearish as we head into the CPI print on Thursday. And I'm just not sure which one it's going to be. We can certainly see a lower low on the S&P 500 or on Nasdaq. Russell, probably that's going to take a whole lot to get down to a lower low. So right now, S&P a little more bullish, Nasdaq a little more bearish, and then the small caps really bullish. So which one is that going to leave us with? I'm not so sure right now. Hard to guess. So anyway, I want everybody to be aware right now. This is one of those points in the market where it can pay to be a little bit cautious. Now, we look at how the market worked out today. Refresh this for today. Little bit on the purple side there, right? Not a lot bullish, not a lot bearish. Just kind of, you had a lot of small names that were more bullish. Your bigger ones just kind of flirting with zero at the end of the day. So not telling us a lot on that one either. Now, we pull over this chart too. I have to click off the ad. This right here. This is the stocks above the 50-day moving average. Zoom it up just a little bit if I can. Yeah, it's going to be a pain, huh? Let's refresh it. There we go. Coming at 64. Now, we came off of extreme lows down here. And I was kind of, back in August, I was beating the drums because we were at the extreme highs. And I was saying, we're going to see a pullback. We're going to see a pullback. We pulled back. We kind of got a little bit of a bounce. And then we really pulled back and made a lower low. Then when we hung out down here for like below 20, the 20 tends to be the reversal point on this chart. This is just S5FI. You can pull it up in TradingView too. When we hang out below 20 for very long, we tend to get a strong reversal that takes us all the way back up to the top. Now, we're kind of consolidated right here. This is similar to what happened back in 2020. I'll have to pull up like a 2-year. Nope, got to go 3-year. 3-year. So in 2020, we popped up, then consolidated a little bit. After we came off the lows, we had a nice big stint of days down here at the extreme lows before we popped. Kind of did that again, a little bit different. It's never the same exactly. But then we popped up here, topped out in the 70s, then we retraced back to the 40s, then we popped on up to the 90s. So right now we've kind of popped up to the 60s, pulled back to the 40s, and are we going to get up to the 80s and 90s? That's kind of what I'm thinking might happen just based on this chart right here. I'm not trying to go crazy out in the future or anything like that. I think we could see at least poke up into the 80s. That tends to be where we reverse. We tend to hang out the majority of the time between the 20% and the 80% on this. That's where, remember, this is a percentage of the stocks in the S&P 500 above the 50-day moving average. So we tend to hang out in the middle zone most of the time. We're hanging out in the middle zone right now, and we may pop up here for a reversal and a pullback. So just be cautious, be careful, watch out. If you're going to hold a gun to my head right now, I'm slightly bullish on the CPI print, but that doesn't mean that we don't see a big spike down just like we had last month. So that's my cautionary tale for everybody out there trading. And I see a few questions about crypto, so let's jump over and talk about crypto real quick before we jump into anything else. Bitcoin basically freaking out today. That's the Bitcoin Ethereum ratio. Bitcoin right there, freaking out, but ultimately holding that trend line. Tried to break it, didn't work. So far, holding above it. Now we start pushing below it. 11,000 is going to be the target area. I mean, there's a big head and shoulders pattern. And I'll have to flip the chart to, let me flip it over here to low layout, crypto power plays. Let's go over here and look at this chart real quick. So we had this big head and shoulders pattern. It started to break out and crush down, broke that neckline. So this is a cautionary tail right here. We're right on the flip here. If we start making a move down here, this thing goes right down to this 11,000 area. All right. So be careful, be cautious. But right now, that big tail, somewhat positive that we may hold this trend line. That's a very popular pattern where we break out, retest the trend line. The trend line holds, go up. That can be very bullish. This happens over and 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 over. Just want everybody to be careful. All right. Any questions on that before I move on? Nope. Good. All right. I saw DIS before I got started. So let's talk about DIS. Well, let me pop back. Let me do one thing really quickly. Click that, save that, go back to the normal chart. There we go. What do you think I'm going to say about that? Oh, getting slammed on earnings. Yeah, that's without even noticing that the post market was trading lower. I was going to say that's probably going to make a lower low, and lower low it is made in the post market. So that's a very similar pattern to what we saw before Amazon reported earnings. What, 2 weeks ago now? Look at that, same sort of pattern. Coming in earnings and right down here. So anyway, that's look like the same pattern cooking right there. And lower low. Now I would expect, all honesty, kind of the same situation where we consolidate the lows that Amazon's doing. That would be what I expected out of Disney right now. So if you're trying to pick a bottom, don't do that. That's dangerous. That's a bad game to play. You know, Disney can easily go down here to this 81 area. All right. FFIB was not a valid symbol, so I'm not sure what that is. All right. Let's see. I see Mora in two different places. Mora right there. That one making a lower low than it made right back here. Not cool. This pretty much invalidates this whole setup right there. And puts us into, that was a bigger correction. And messes with my bullish count. This is going to be definitely dependent on Bitcoin not breaking down. Bitcoin starts breaking down. This one's going lower low. And, you know, a put down here at $7 or something like that's going to be about the best you can do. You know, going out of business, 0 is the lowest it can go. So we don't have a ton of room left on Mara. Is the not what we wanted to see right there. Didn't want to see it bounce back down off the roadmap line. Wanted to see it break, you know, hold a higher low and move, but it did not do that. That's not immediately bullish, and it's just a bummer right now. I'm still holding a 6-figure position on Mora, so if it breaks down, it's going to be a huge bummer. Right now, I'm just holding fast. All right. Oil, yeah, it's all natural gas. You know, looking at these derivatives of natural gas is not going to help us much. Really, that's the chart that tells the picture. And they're all derivatives of natural gas. And if you're trading anything, UNG, Boyle, LNG, all the others, you're just trading some sort of derivative of natural gas. You know, LNG is up at the top, but I mean, I learned long ago. I'm trying to think of what to say. I learned long ago that if you're trading a derivative or a derivative of a derivative, you got to keep up with the underlying. The underlying for natural gas, no matter which way you're playing it, is natural gas. Go look at the futures. Look at the spot market if you know how to pull that up. That's the things you got to keep up with. Now, if you see something breaking down on the futures and it hasn't reflected in the derivative yet, then you've found an opportunity. It's either one of the two of them is going to come back in line. Usually it's the derivative that comes back in line with the futures. So I urge everybody to keep up with the futures, not keep up with all the derivatives. And that goes for everything, like whether it be, leveraged S&P, like SPXS, SPXU, SPXL, SQQQ, any of the leveraged instruments that you might be into, UVXY for VIX, SVXY for inverse VIX, any of those derivatives, you got to keep up with the underlying. All right, I can't stress this enough. And if you don't know how to keep up with the underlying, keep coming back, asking me. Ask me in Discord for those that are members that follow me. I'll break it down. I'll help explain it to you until you can keep up with it. That's one reason why I keep up with the S&P futures, the Nasdaq futures, the Russell futures, the oil futures, the gold futures, and which is one we didn't touch on today. That one looking super nice. Got to get back above the daily roadmap line up here around 1750, 1760 before I'm really interested in going long on gold. Otherwise, it could just bounce off like it did right here and go lower low again. All right. Anyway, SDC, Smile Direct Club, looks pretty bad to me. Down to 64 cents. Nice earnings. Surprise, surprise. Not really affecting the price though. Bounced off. I mean, this is just classic. Like bounced right off the roadmap line and lower. Bounced right off. Lower. Tried, failed attempt. Lower. Bounced off. Lower. Until it gets above there. Lower. I mean, that's same pattern over and over. All right. BTU. Yeah, that's another. This is a coal miner. Peabody. I am long some shares of this. Nice energy play. Potential breakout. Been looking for it to get above this $30 area for confirmation. That's really where we get above this high right back here. And we did have a downtrend yesterday and today holding above it. That's first positive sign. A move back up firmly above this high we had back here. Second positive sign. 37 is the target. 42 above that. I mean, I'll probably step off the train about 37. That's kind of my plan right now. And Biden hates coal. Well, big deal. The less of it we mine, the more people that have mines like BTU, the more money they make. So it's kind of what's got us in the jam right now too. I was playing crack for those that paid attention. When it broke above 30 back here, or 20, I guess it was right at 30, I picked up some shares. And I guess it was 29.50, I guess it was. 29.50. I picked up some shares. Why shares? Well, the options are pretty illiquid on crack. So this is oil refiners. There is, if you didn't know, there is a shortage of diesel fuel in the eastern coast area, southern eastern coastal area, Tennessee, Georgia, Alabama, Florida, South Carolina, North Carolina, that whole region over there. There's a shortage of diesel. You know who stands to make money from that? Oil refiners. And I have a like a $35 target. I may step off the train at 33. That may be a point where it pulls back before it goes on the next run. And 33 could be the top. And then we pull back to 30, 31 area one more time before we get that next move up to 35. Of course, could do like UCO did back in the spring, and it just go ripping off. So this one is much more advanced than the oil chart. And this has to do specifically with refiners. This was the best way I found to play a shortage in diesel fuel. And so far, it's kind of working out for me. So any questions on that? No? All right. Let's see, FFIB. Yeah, still not pulling it up. Maybe because I'm on stocks. Yep, still nothing on FFIB. Yeah. Anyway, all right. F in CHPT. Looks pretty sideways to me. That's no real trend cooking there. That's really just a bunch of what I would say would be indecision right there. That's long and the short on that one. All right, let's see, AG. Getting a little break above. First positive sign there. If we need to run a fib line, it's not the ultimate high, but close enough. It's got a long way to go back to this 1150 area before it really starts confirming. Oh, look at there, a little gap right there. Coincidence. Shane, Christine, Everett, if y'all are around. Remember what I said about gaps and how things kind of line up with the 618 sometimes? It's funny coincidence right there. This one has got to see a move back up through that area to really get bullish. And my pretty blue arrow. There we go. So I got to see something like that on AG. All right. Let's see. FNGU. Looks like she's going down. Down, down, down. It's a 3 times leveraged FANG. I mean, you could play it SQQQ, be similar sort of situation. If you think we're going down with the ship, I mean, this one can extend out to 76 or 88 on the upside, holding the roadmap line there. I don't know. Alrighty. WEAT, and that one's just kind of consolidating right at the roadmap line. A little trouble getting through. I did put out a big bold prediction on wheat heading into the first quarter of next year. So far, just consolidating before the next potential big move up. One nice move up can put this back in the $10 area. 12 to 15 area was my target. So looking for that one to just make the next leg up. Alrighty. Coin. Yeah, we can talk about coin here in a second. Let's see. SQM. SQM. Yeah, that's, I mean, assuming I pulled up the right thing here. SQM. Nope. Maybe. Yeah. Pretty bullish looking. That's pretty nice. Pretty nice. Above the, yeah, that's that'd be a pretty bullish indication right there that we could see higher prices. Probably 123 on a target, 135. It's I'm kind of confirming the conservative entry there for this roadmap type setup going higher. So that one looks pretty nice. Coin, I can tell you that one looking pretty bearish, and down here around 30 is my target. Looking for something like that. I see Uber. And that's just sideways. I mean, that's hugging right on the roadmap line until it breaks out above. I mean, it's just got a big box here. Above or below there. But sideways in the meantime and in between time. Alrighty. Excuse me. Getting that 7th inning gravel in my throat. Let's see. Allegiant. That's nice. That's, oh, let's see. Got me one that's interesting. Didn't quite get an echo down. Let's see what we see. All right. It attempted to break above. Got one day and then slam back down. So now we got to get above that high that it made right back there. If it can maintain a move above that, say 142, get a daily close and stuff up there, continuation, it's going to set it up to go out to 156, potentially 165. The very nice setup right here. Good potential. Just needs to follow through. Excuse me, golly. All right. ABBV. Yeah, another one. Look at that. Nice potential. Got to move that lower low over here. It's got lots of stuff to work through right up there. Yeah, see it rejected that right there. So that's that support resistance line right there. That gap down. Tried to go up through it. Tried to go up through it. Tried to go up through it. Is the fifth time the charm, whatever. 1, 2, 3, 4, fourth time the charm. I don't know. Got to get up through that. Then clear the 618. So really, it's got a big resistance zone that looks about like that. Got to get up through 160. And that can set it up to get some extensions out here, like 187 to 200. Be a pretty good, nice, big, fat move on ABBV. Slurring my letters. All right. All right, that's cool. Got a bot in the chat on YouTube. That's a first. I feel honored. A bot came and sullied my channel. Anyway, sorry for those in the chat. I don't have the... Kimberly could log in and delete that if she wanted to. She has the power. Let's see. All right. BG. We need a move. We got this. See where it found support and flip resistance right there. Right at the 618. Got to clear that zone back above 112-ish. Right in there. Right in the zone. That would be like conservative type entry. Your stop, of course, down here, back below the, really below the lows, but below the roadmap line might be the better place to put it. If it's going to fail out, move up to 140 or 157 is what we'd be looking at. Alrighty. Next up, ZIL. That looks pretty bad. Yeah, all the way back to the beginning of the history. Let's see what kind of pullback this is. That looks pretty bad. I can easily break down and retrace it back to the low, the original IPO price. Sorry, I don't have better news on that one. Alrighty. Yeah, made it on the big time. And did I not get WEN? I'm so sorry. So sorry. WEN. Wendy's. This is back to that other setup that I looked at a minute ago. So we're hugging the roadmap line. While this is a potentially positive sign right there, the fact that we kind of look how much of this year we've spent in this zone right here. Even back, look at that, even going back into the fall of last year. See, we dipped into the zone, broke down through it, found resistance, came up to the top of it, right back to the bottom of it, stuck in the middle. So I'm not really super interested in trying to make something work on this until we get out of the top of this thing. And it's going to take a move back above 2170, I mean. Then you're only looking at like 2250 to 2350. And we got this bigger resistance cooking over here. And I mean, it's not a big mover. That's a tough one right there. This could easily return back to the bottom of the box. You know, playing in that box is where I expect it to kind of stay for a while. Maybe sideways like that. All right. Sorry, Shane. Wish I had better news for you. The plus side, I do have your 3D print basically done. So we'll talk about that later. All right. BBY. The Best Buy? Yeah. You get Best Buy and Blood Bath & Beyond confused sometimes. Their ticker, BBBY. I don't know. Even though we're looking at Christmas time coming up, that's not super bullish looking. I mean, it's been on a last big spike they had. That was a run from September into November. Right at Black Friday shopping time, and then it's been downhill from there. They had a lot of sideways running in up into that too. That looks a lot like the small caps. I mean, holy moly. Look at this right here. Look, see that? IWM, pop, drop, consolidate sideways, pop, drop. Isn't that interesting? Sometimes the charts look the same. It's really interesting on Best Buy and IWM. What would I expect right now? It's not bullish. So sorry, Tom. All right, PBR. I'll take a few more and then we'll wrap this up for today because gotta encourage everybody to go vote if you haven't voted yet. Get out there and vote. PBR, not really. I mean, that's sideways for a long time now. Trading in a range, seems to top out about 16, seems to bottom out about 10, 11. Stuck in the range until we get out, up or down, more sideways. You could trade the range between, well, when it gets down to 10, buy some, and when it gets up to 16, sell some. Otherwise, sideways is the name of the game on that one. All right. Good, Bob. I'm glad you got her done. URA, I just got some shares of this, and I'm just kind of sitting on them right now, waiting for this thing. There's great potential, but that is a long-term downtrend right there. Long-term, months-long downtrend. Breaking out of that can lead this to a nice, healthy pop, but right now we don't have the breakout, so just left wishing. 35 to 40 on the upside if it will get out of this funk. Just consolidating sideways right here. So not bullish and not overly bearish. Just kind of sideways on URA. PLS. Well, that's a nice move right there. Nice bullish move. I'd be looking for targets, protecting them, chasing it up. Looks like one more extension up to 6. Could be in the cards before we see a pullback to the roadmap line. So that looks like the consolidation needed to get the next extension. It could go up to as high as maybe 7. But remember, the higher it climbs on this fib ladder before major retrace, the more you can expect something like this. And this roadmap line will come on over something like that. So be careful, be cautious on that one. All right. JPM. Yeah, getting bullish. That's a nice break up. It's like one big move up. Does not make a new trend. We need to see it make a little retrace and then break out and get some continuation. Hopefully this retrace will match something else that we could kind of compare it to and get something going here. So this thing could run on up a little bit more before it does that pullback, but at some point, it runs its course, it's going to get a pullback. And looking at that right there, it may top out right around 136-ish before it gets a pullback. So be careful on that one. Alrighty. AMGN. Yeah, let's look at a couple popular ones before we. Oh, look at that, right up to the 297 area. Finding a little resistance there today. Couldn't get much higher. 292 in the post market. 292.40. I'd watch out for that one to pull back. Now it could keep on extending, but remember, the higher it goes, the more likely it is to pull back deeply. So watch out. All right, NVDA. Yeah, roadmap line coming up. That's the question. What happens when it gets there? Does it bounce down or does it break out? That's what we're waiting for. It's a nice, big, healthy move up, unlike AMD that is just kind of farting around down here at the lows. This one can easily extend down one more time. And then I know Apple. Everybody wants to know on Apple. This one, here, my notes on my, that was the first positive sign back there. But currently, well, that's what we're contending with. Looks more like the S&P 500 chart than it does, and more S&P 500 futures chart than it does the Nasdaq chart, where we are below, hanging out down here. So this can be bullish. That can be that breakout back test thing like I was talking about on Bitcoin. But it can also break down. So careful on Apple. Amazon, like I said, consolidating at the lows. This $89 area was the target based on, I did a live stream. You can go back and watch it where I talked about Amazon and Apple earnings. And I called this $89 area as the target. And lo and behold, it's right down there messing around, holding it. So this can be a bullish setup. I did go long some June options, looking for a run out of here, but right now, not doing it. Just consolidating at the lows. So, alrighty. Tesla, that'll probably be the last one I do. Hanging out at the lows here. That's turned down at the roadmap line. Hoping it would hold positive, but it did not. Extension down to this 178 area is potential, and if it doesn't hold there, 142 below that. So there's your parameters. Tesla looking like it's going lower. Alrighty. XOM, I can throw that in right before XOM. Yeah, extensions. Next one up is 120. Be careful on that one. BP also potential breakout. Working, it's having a little trouble breaking out, but 36 on BP. So, all right, that's what we got. I want to thank everybody for coming. Hope you stay safe out there. Remember, Thursday CPI. Be careful. If you missed the beginning of this, make sure you go over to YouTube. Let's throw up my link here. Go over to YouTube, check it out, and it's right there below my face. Go to YouTube, rewind, watch that beginning part, the warning. Because CPI is coming on Thursday before the open, and it's a little bit of a coin flip. So, all right. Thanks everybody for coming. Go check out this over here. Oops, I left it on. Left my transition on the thing there. Yeah, make sure you check this out right over here.